is East Asia Tonight.
Good evening, I'm Otelli Edwards. Tonight's top stories. Chinese President Xi Jinping woos Latin American and Caribbean nations, pledging billions in development credit and deeper cooperation in several sectors, from energy to infrastructure. While the White House further turning down the heat in a tough trade war, it's now slashing tariffs on small parcels sent from mainland China and Hong Kong to the US. China is also bolstering the tariff truce by lifting a ban on Boeing deliveries, giving an immediate boost to the American aerospace giant. And fresh off the high of the trade truce with China, Donald Trump is now in the Middle East, the US president seeking more economic deals as he begins his Gulf tour in Saudi Arabia. Also in East Asia tonight, not your average salarymen. When they're done with the corporate dealing, they go cartwheeling. Find out what drives these office warriors in Japan to double up as cheerleaders on weekends. China hosting Latin American and Caribbean leaders and increasing its footprint in the region, but committing credit of more than $9 billion denominated in yuan. President Xi Jinping also promises deeper cooperation in various sectors, from energy to infrastructure. Beijing also cast itself as defender of the multilateral order at the China CELAC Forum.
面对地缘政治和阵营对抗 暗流涌动，单边主义、保护主义逆流增长。中方愿同拉方携手启动5大工程，共谋发展振兴，共建中拉命运共同体。
Mr. Xi was referring to programs on political exchanges, economic development, cultural and academic exchanges, and global security. China is challenging America's geopolitical and economic dominance in the region. It has surpassed the US as the biggest trading partner of Brazil, Peru, and Chile, among others. Right, for more on this, we are joined now by CNA's Olivia Zhang, who is at the forum grounds in Beijing. Ollie, the US trade tensions, how did that factor into President Xi's speech?
Well, I'll tell you, yes, I was at the forum grounds earlier this morning attending the opening ceremony, but now back in our studio in Beijing. I have to mention, though, that President Xi did not directly mention the U.S. during his 20-minute or so speech this morning, but the veiled reference of Washington was pretty clear, in which he pitched China as a good friend and partner, and calling for unity with Latin American and Caribbean countries to safeguard global peace and stability in the midst of what he said were seething undercurrents of geopolitical and bloc confrontation. Now, we do know that this is significant, that given that these are President Xi's first comments since that trade deal between China and the U.S. just yesterday, that dramatic rollback of sky-high tariffs on each other's goods. But despite the substantial progress that has been hailed by both sides, President Xi today making very clear Beijing's position on the trade war. Have a listen.
关税战、贸易战没有赢家，霸凌霸道只会孤立自身。中国同拉美和加勒比国家都是全球南方重要成员，独立自主是我们的光荣传统，发展振兴 是我们的天然权利，公平正义是我们的共同追求。
And we should point out that President Xi was addressing a hall full of leaders and senior officials from Latin American and Caribbean countries, including the heads of state of Brazil, Chile, and Colombia. And we know that China has been on a charm offensive, really, with many countries from the so-called global south as it seeks to mitigate the impact of the U.S. tariffs on its economy, calling on all the countries, including to stand with China to protect multilateralism. I'll tell you.
So, Ali, charm offensive we have seen, but in terms of concrete outcomes, what can we expect or what have we seen so far?
Well, we are expecting the Chinese Foreign Minister Wang Yi to meet the press later this evening. We'll be looking out for two particular documents. One, a joint declaration between China and these countries from the region. Also, a joint action plan for 2025 to 2027, which the Chinese Foreign Ministry said will cover specific areas of cooperation. So we'll be keeping a lookout for that. But earlier in his speech, President Xi did announce a whole slew of initiatives pledging to increase imports from Latin American and Caribbean countries and encouraging enterprises to invest more in the region as well. Particularly of note, he announced a 66 billion renminbi or more than $9 billion US credit line to support development in the region. There were also other initiatives on the security front. We're talking about China saying it will organize law enforcement training programs for these countries, and to boost people-to-people exchanges. It's offering visa-free arrangements for 5 countries in the region with plans to expand that further in the years to come. And this comes amid that growing competition we were talking about between China and the U.S. in the region as it vies for geopolitical influence. We've seen China step up its engagement economically, diplomatically, as we've seen today, but also the U.S. step up engagement there as well. We saw the Secretary of State, Marco Rubio, calling for countries to counter China's influence in the region during an earlier visit this year. And it is a delicate balance that these countries will have to take. And we heard from the Brazilian president, Luiz Inácio Lula da Silva. We have his quote here saying that the region, however, should not become a stage for hegemonic disputes, but that the fate of Latin America should not depend on China, the U.S., or the EU, but should depend on itself. Oteli.
Hey, thanks so much for that report. CNA's Olivia Zhang speaking to us live from Beijing. And of course, we'll be having more analysis later with Pepe Zhang, who has more than 15 years' experience on the relations between among US, China, and Latin America. The United States will cut the low-value de minimis tariff on China's shipments, further de-escalating a potentially damaging trade war. Well, starting from tomorrow, the levies on low-value goods will be reduced to 54% from 120%, with a flat fee of $100 to remain. Goods valued at up to $800 and sent from China via post could previously enter the U.S. duty-free and with minimal inspections. But President Donald Trump ended the exemption in February, blaming exploitation by e-commerce firms, as well as traffickers of fentanyl. The talks in Geneva brought down reciprocal tariffs, but did not remove the 20% levy imposed by the U.S. over Beijing's failure to stop the inflow of fentanyl.
中方已多次表明，芬太尼是美国的问题，不是中国的问题，责任在美国自身。美方无视中方的善意，对中国无理加征芬太尼关税，这严重冲击中美在禁毒领域的对话与合作，也严重损害中方利益。
Meanwhile, U.S. Treasury Chief Scott Bessent says the agreement in Geneva has created a mechanism that avoids further escalation in trade war.
We do not want a generalized decoupling between the two largest economies in the world. What we want is the U.S. is going to decouple in strategic industries, which we saw during COVID.
All right, let's bring in CNA's Deborah Wong. She is joining us live from Shenzhen. Debs, we see there quite a significant rollback in previous trade measures, including the latest de minimis tariff cut. So how big a deal is this move for China?
So before the de minimis exemption expired on the 2nd of May, there were no duties at all for this category of goods. So even with the rate cut, sellers will still have to pay tariffs. I wouldn't call it a very significant move because some systemic changes were already in place ever since the exemption was lifted. Because Chinese e-commerce platform Temu, they decided to switch to selling goods locally in the U.S. instead of exporting to the U.S. directly to consumers. So right now, goods are not as cheap as before the 2nd of May. Now, we have not seen any statements so far from Xi or Temu just yet on the latest developments. But what I can tell you is that the impact that logistics sellers here in the logistics hub of Shenzhen is facing is going to be quite significant. We did speak to some of the companies here, and they say that, they suspended operations in the past month due to the uncertainty regarding the tariffs. Right now, they're preparing to resume operations. They're putting in orders for containers bound for the U.S., and they expect that all these surge in demand would definitely lead to some surge in prices as well. And some sort of stability would only come down right after we see the developments happen over the next 90 days, I tell you.
So fentanyl, it appears, remains a sticking point between Washington and Beijing. What's the potential impact for future talks?
So it has the potential to stymie any progress, because the fentanyl issue was one of the core reasons that President Donald Trump had targeted China on. But it's also something that China is not budging on. You've just heard from the Chinese Foreign Ministry earlier this afternoon that the narrative has not changed. The Chinese Foreign Ministry repeated that the fentanyl issue remains very much a U.S. domestic issue and that the U.S. should stop smearing and blaming China. In fact, they want the U.S. To continue dialogues mutually, respectfully, as well as on equal footing. In fact, China released a white paper on national security the very same day the joint statement on the Geneva talks came out, which is on Monday. It reminded the U.S. that it must not suppress China from a position of power. We also saw in that paper they outlined 4 red lines. It's a stance that they've mentioned countless of times before. And these 4 red lines include Taiwan, democracy and human rights, China's political path and system, as well as its right to development. So these are issues that China and U.S. have constantly had disagreements over. So all these issues could very well impact talks as well. Back to you.
Well, thanks so very much for that. CNA's Deborah Wong in Shenzhen. Now, the second day of campaigning is underway for South Korea's presidential election. Candidates are looking to woo voters in conservative strongholds in the nation's southeastern region. All 3 have vowed to unify a deeply polarized society and revive the country's sluggish economy. Opinion polls show Democratic Party candidate Lee Jae-myung with a solid lead. The 61-year-old looking to secure the support of regional and centrist voters in his visits to North Gyeongsang. The opposition frontrunner has expressed regrets over the need to wear a bulletproof vest during yesterday's campaigning, following what he calls concrete threats to his life. Mr. Lee survived an attack in January last year when he was stabbed in the neck while campaigning in Busan. A former Labour Minister, Kim Woon-soo of the incumbent People Power Party, or the PPP, is also touring the region to rally conservative support. He has vowed to focus on boosting the local economy and plans to visit the Busan International Finance Center and attend an event by the Korean Confederation of Trade Unions. The European Commission has requested the Czech Republic postpone signing a contract with South Korean state-run firm KHNP. Now, the project to build 2 nuclear reactors is worth at least $18 billion. Brussels is looking into whether KHNP received foreign subsidies that tilted the bidding process in its favor. But the Czech Republic has insisted that the South Korean offer was indeed superior and the EC letter is non-binding. The Commission's request adds another potential hold-up to the nuclear power tender after a legal challenge filed by losing bidder the EDF of France. A subsidiary of the Czech electricity firm has slammed the unsuccessful bidder, saying it's not interested in winning the tender, but in ensuring that no nuclear power plant is built in the Czech Republic. The project is the country's biggest public procurement as it moves to replace coal and aging nuclear units. For South Korea, it would mark its first overseas nuclear plant contract in 16 years. We're going to go for a break now, but coming up on East Asia tonight, Japanese tech investor SoftBank posts its first annual profit in 4 years. Equity markets in the region welcome the breakthrough in US-China trade talks, but uncertainty over further negotiations weighs on investor sentiment. Hello again. Good to have your company on East Asia tonight. Well, we've got Roland Lim who's standing by with updates from the business world. So, Roland, tariffs impacting or rather hitting the Japanese car makers severely. How's that coming along?
You heard right, Ojeli. Now, Honda forecasting 70% net profit drop, and Nissan has posted a $4.5 billion annual net loss, citing hits from tariffs. I'll get to that in a while, but first, China reportedly lifted a ban on taking the deliveries of Boeing planes, this in the wake of the trade truce with the US. According to Bloomberg, officials are telling domestic airlines and government agencies that they may resume receiving the jets. The move comes after US and China tapped the brakes on the trade war between the two economic giants. Last month, the US plane maker said that a number of its customers in China had indicated they would not take delivery of new planes due to the tariffs. China represents about 10% of Boeing's commercial backlog. Chinese customers are expected to take 25 of the 30 remaining 737 MAX jets built before 2023 that have not yet been delivered. Now, at least 4 777 freight planes are also in production for Chinese carriers. Most East Asian markets extended their gains today as investors basked in the glow of the China-US tariff suspension. Shanghai Composite rose 0.2%, Shenzhen slightly underwater, and the Hang Seng Index dropped 1.9%, giving up some of Monday's 3% gain. The buzz on trade talks wearing off in Hong Kong, it seems. Elsewhere, it's a relief to the markets. In Japan, the Nikkei 225 climbed to near 3-month highs. Shipping and pharma stocks leading the gainers there. In South Korea, the Kospi also inched higher, supported by gains in chip makers, thanks to the US-China trade truce. The benchmark Taiwan index also climbing nearly 1% today. Look at safe haven assets. The Dixie dollar index easing to 101.58 as markets digested the tariff news and looked ahead to this week's U.S. inflation data. The yen firmer against the dollar after traders unwound their yen positions, reflecting a modest risk-off tone. And gold price is also stabilizing after touching a more than 1-week low the previous session. Earlier, we spoke to Martin Haneker from St. James's Place. Now, he listed out what investors should watch out for in the coming weeks as a trade deal between Washington and Beijing unfolds.
Sure, there still is a lot of uncertainty about details, but I think on a high level, what this deal, even if temporary, signifies is that I think Trump might have somewhat underestimated China's might, I would say, and the pressure that this essential embargo was going to create for consumer prices in the US. And we shouldn't forget that a large part of the voter base are people who might not necessarily be the most wealthy and who are quite sensitive to those price pressures. Now, I do think it's definitely helping the situation. And from an investor's perspective, what's interesting to note is that the US markets have already rallied back quite a lot, whereas emerging market in China have been somewhat more tepid. And so right now, it's therefore investors who do have an overweight on the US market, it might be a really great time to broaden out and diversify. We are still seeing close to record low valuation discounts in emerging markets, generally in China specifically. And if the tariff is indeed easing somewhat now, and that was the largest worry, of course, some of the other very positive fundamentals on China might shine through. That trade actually with other nations had been strengthening a lot over the past 10 years. 90 out of the world's 190 countries have more than twice as much trade with China than the US, and the figures with non-US countries have been improving a lot. One more factor I think people also aren't aware of, Chinese household bank balances have actually increased over 10 trillion US dollars over the last 10 years, just sort of waiting there. There's been so much lingering uncertainty in different ways. And once confidence returns a bit, that could flow back to consumption or in the stock market. So we are quite optimistic and suggest to broaden out. We are positioned underweight on the US relative to emerging markets at this point.
Chinese rare earth exporters are asking authorities if they can sell to the US, according to reports from Bloomberg. They were left in limbo after Washington and Beijing reached a 90-day trade truce. As part of the deal, China has agreed to cancel non-tariff countermeasures it had imposed on the US. Last month, Beijing added 7 rare earths to its export control list to retaliate against US levies. These elements are vital to high-tech and defense manufacturing. Neither side has explicitly said that the rare earths controls had been rescinded, leaving Chinese exporters waiting for guidance from authorities. A surge of small-scale Chinese listings in the US as companies race to beat a rule change that blocks small deals. Over the past 2 quarters, listings from China, including Hong Kong, were almost 3 times that of the US, contributing to a booming micro-cap IPO market. Observers cite Chinese companies in sectors from pharmaceuticals to construction. The offerings come prior to NASDAQ's policy change requiring firms listing to at least $15 million raised. According to Capital Markets Gateway, the average amount raised in these small IPOs were around $9 million. The rush of Chinese IPOs comes as questions swirl over whether President Trump will delist Chinese stocks from U.S. exchanges amid trade tensions with Beijing. Easing U.S.-China trade tensions are expected to help Apple, which is one of the most prominent firms caught up in the tussle. Mr. Trump said that he spoke with the tech giant's CEO after tariffs were suspended for 90 days.
I spoke to Tim Cook this morning, and he's going to, I think, even up his numbers, $500 billion. He's going to be building a lot of plants in the United States for Apple, and we look forward to that. I really do look forward to that.
Apple previously announced a $500 billion investment in its U.S. operations, including in AI servers. The tech giant manufactures most of its products in China and also counts the country as its 3rd biggest market by sales. Last month, it received exemptions on some of the highest tariffs on China, but that didn't stop Apple from laying out a tariff strategy during its recent earnings call. Now, it included moving production to Vietnam and India. Shares of Apple jumped 6% in line with the broad rally on easing tariff tensions. Also helping the stock today, a report that it's considering raising iPhone prices. And I'll be back with more business news a little later on. Back to you for now.
All right, chat with you again then. Thanks so much for that, Roland. Right, we're going to go for another break now, but coming up next on East Asia tonight, we take a deep dive into China's growing economic and political ties with Latin America with our special guest, Pepe Zhang. And US President Donald Trump begins a 4-day tour of the Middle East with an eye on landing major economic deals with the Gulf states. Hello again, this is East Asia Tonight, and here are the headlines we've been following. The White House further turning down the heat in a tough trade war. It's now slashing tariffs on small parcels sent from mainland China and Hong Kong to the US. Now, China also bolstering the tariff truce by lifting a ban on Boeing deliveries, giving an immediate boost to the American aerospace giant. And amid the climb down in tariff tensions with the U.S., China pivoting to Latin American and Caribbean nations, pledging fresh credit denominated in yuan, totaling more than $9 billion. Chinese President Xi Jinping has vowed deeper ties with Latin and Caribbean nations, slamming what he calls bullying by other countries. Well, Beijing is now South America's biggest trading partner and second largest for Latin America as a whole after the U.S. Asia's #1 economy has an outsized cultural, diplomatic, and military presence there and is also a major investor in the region's infrastructure and energy industries. Now, in November, the leaders of China and Peru opened a mega port in Peru, the latest addition to the Belt and Road Initiative. 22 Latin American countries have signed on to the BRI so far. Colombia has now said that it wants to join, but Brazil has decided it's a no. Well, official data shows a two-way trade between China and Latin America doubling in 10 years to nearly $520 billion last year. Now, the region's exports to China are mainly soybeans and other vegetables, also animal products and petrol. In return, it buys China's higher value-added manufactured products, which some say have undercut its own local industries. Well, the Chinese president has visited the region 5 times since he took office in 2013, calling Latin America a key partner in his vision of South-South cooperation. A big question, though, since U.S. President Donald Trump took office is, will Beijing win big from Washington's punishing tariffs in its own Latin American backyard? Some say yes, but others think that Latin American states should be even more wary of boosting ties with China now, at risk of retaliation and even higher tariffs. Well, to break this all down for us, we are joined by Pepe Zhang, author and consultant on China-Latin America relations. So, Mr. Zhang, well, welcome to East Asia tonight. So, it is interesting that this meeting, happening just as U.S. and China, they've sort of chilled out a bit on the trade war. Do you think that easing of tensions changes the tone or perhaps even the outcomes of the China-Latin America talks?
Yeah, thank you for the opportunity to join. From my perspective, I don't think it changes that much. I mean, part of the reason was that, like most of these multilateral fora, a lot of the conclusions and I think issues that folks are working on, they've been in works for a while. So I don't think that's going to be infected in such a significant way. But I think the more important point here being uncertainty will still remain geopolitically in the international arena. And diversification is really named the game, right? It just really means that you cannot be super dependent on any partner country, and it doesn't matter which country that is. And from that perspective, I actually see the Latin American, Caribbean countries being very similar to a lot of ASEAN nations, and I think countries are very pragmatic. They're willing to work. They want to work with willing and capable partners. Sometimes it's going to be China. Sometimes it's going to be the United States. Sometimes it's going to be some intra-regional partners. So that would be my short answer to your question. And I do think that this is one of the most exciting and eventful weeks about Latin America and Caribbean, China, and happy to delve into that a bit more on the details.
Yeah, if you could just sort of elaborate a little bit on that, because, uncertainty is here to stay, but they're caught in the middle, right? Latin American countries are under pressure from Washington as well as Beijing. How do you think they're going to manage this balancing act like this region as well? And can they keep playing both sides?
Yeah, my first point is, it's going to be increasingly challenged to play both sides. We saw what happened with Panama, specifically with the Panama Canal. And I think countries obviously want to be able to play both sides and play to the competitive dynamics between China and the United States to the extent possible. But I think the wiggle room there is now decreasing, at least in certain countries, in certain situations. But the second point here being that countries will continue to advance their own interests. One of my favorite quotes to think about situations like this was one of the quotes by a former Brazilian vice president. He was asking media whether, in a U.S.-China contest, if he would choose the American side or the Chinese side. And he basically said, I'm not choosing the Chinese side and I'm not choosing the American side. I'm choosing the Brazilian side. And I think that really captures the mentality, how a lot of countries in the region are thinking about this particular issue. And once again, very much similar to a lot of countries in ASEAN. And I'll give you a concrete example here, right? So this forum of China CELAC that's happening in Beijing this week is very well attended. We're talking about 3 presidents and maybe 17 foreign ministers and a lot of other ministers coming from different countries. One of the 3 presidents in attendance is Chile, and Chile has always been one of the most open economies in terms of trade and some other economic issues in the region. And China is not the only destination for President Boric on this trip. He is also just a couple of days ago, he was in Japan, which one can argue is one of the strongest U.S. allies in the world. And just a couple of weeks ago, he also had a state visit to India, which has a complicated relationship with China, so to speak. So going back to my early point, I do think that diversification is going to be the name of the game. And I think point number 3, what I would say is I would push back a little bit on the narrative that, just because there are tariffs, there are certain uncertainties, certain countries will be able to benefit automatically. I do think that all countries need to work a little harder to charm over their allies and friends and partners. One of the questions I get asked quite a bit is, for example, are the tariffs going to push Latin American countries a lot closer to China, especially with this forum happening? And I tell them, we'll have to wait until the official readout comes out and see the results of the readout. It's certainly a possibility, but I don't think it'll be automatic. And this is especially something that, when we think about what's happening on the U.S. side as well, the United States also has a lot of opportunities to shape its own relationship in the hemisphere with Latin American Caribbean countries. They're going to have a heads of states level meeting towards the end of this year, the Summit of the Americas. So there's certainly certain opportunities there. But, back to this week, I do think that there's a lot happening in the China, Latin American, Caribbean space here in Beijing, and a lot of interesting announcements. And that's been, I think, something that a lot of folks I've been talking to here on the ground been focusing on.
Yeah, so one of the interesting announcements was this President Xi pledging over $9 billion in credit towards the development for the region. And what kind of influence, does that by China?
So 9 billion, I think, if we put that in the context of Chinese financing abroad, and even in the context of development financing in Latin America, it's not a massive number, especially you have to spread it out over the years, right? So again, we really want to see the details of how that's going to play out and what it's going to be used for. But I do think that's significant. The number is significant not because the number itself, but for 2 other reasons, if we want to delve into the details. One is that if you look at Chinese official lending, meaning government-to-government lending from Chinese policy banks to Latin America and the Caribbean, it's been on a downward trajectory since 2015 and basically dried up during COVID. In the last 4 to 5 years, we haven't seen too much movement there. So if this $9 billion figure is actually coming into play into the development space, then it might signal a reversal in that area, which is going to be very interesting and significant. And the second thing I found very interesting about this particular phenomenon is that international development, on one hand, is a core part of China-South America relations because of the shared agenda in the global South, but also because if you look at what's happening in the rest of the world, you see a structural and some temporary forces, creating a retrenchment of development financing from some of the traditional donors, right? We've seen what's happened in the United States with USAID. We've also seen European nations and the UK doing budget cuts on foreign aid to prioritize defense spending. So within that context, when you see China stepping up a bit more on the development space through development financing, that is, I think, more symbolically significant. So that's my thought on the 9.2 billion. But finally, I think to further elaborate on some of your questions, I think, without further details, I would say that a lot of these, the credit will probably go into some of the sectors that came up quite prominently in this particular forum, some of the traditional sectors, including agriculture, the mining and energy and infrastructure, but also some of the new sectors such as artificial intelligence and some of the technology, electric vehicle, for example.
There's some great points that you've raised there. Thanks so very much for your time and thoughts. Pepe Zhang, author and consultant on China-Latin America relations. Well, U.S. President Donald Trump is on a 4-day visit to the Middle East. That's his first official state trip since returning to the White House. Well, he landed in Riyadh just a few hours ago with the tour focused on securing major economic deals. The Saudi fighter jets flanked Air Force One as it approached King Khalid International Airport. And Mr. Trump emerged from the aircraft, punching his fist in the air there, and was met at the tarmac by Crown Prince Mohammed bin Salman himself, which is a rare honor. Traveling with the U.S. President are Secretary of State and National Security Advisor Marco Rubio and Defense Secretary Pete Hegseth. And Mr. Trump will be attending the Saudi-U.S. Investment Forum today as Washington seeks more investment from Gulf states. Now, he is hoping to secure $1 trillion in Saudi investments into American industry, far beyond the $600 billion already pledged. Mr. Trump and the Saudi Crown Prince are also expected to discuss some of the region's most pressing issues: Iran's nuclear ambitions, the war in Gaza, and oil prices, of course. The two leaders are now at the royal court, where the U.S. president attended an official ceremony. Well, after Riyadh, Mr. Trump heads to Qatar, the United Arab Emirates. Notably, Israel is not on the itinerary, a decision that's raising eyebrows about where the longtime U.S. ally fits into Washington's current priorities. Well, as President Trump embarks on his Middle East tour, his focus is not only on resolving the region's ongoing conflicts, but also strengthening economic ties with Gulf nations. Well, experts say that his first official foreign trip of his second term reflects the growing significance of the Middle East in his administration's foreign policy agenda. Nick Harper has more.
It's time for deal-making. As with his first term, US President Donald Trump has chosen the Middle East as the location for the first major foreign trip of his second term, a choice that speaks volumes about his presidential and personal priorities.
During his first administration,
Gordon Gray is a former ambassador and the Kuwait professor of Gulf and Arabian Peninsula affairs at George Washington University.
He's very interested in pursuing commercial deals. He's very interested in trade, and the Middle East, and particularly the Gulf countries he's visiting, are certainly areas that are very ripe for good deals for U.S. businesses.
The Trump administration is trying to force the countries to choose trade with the US over China. But some analysts, like Jennifer Gavito, formerly with the State Department and now non-resident senior fellow with the Atlantic Council, warn that a one or the other choice may not be in the country's best interests.
As they look at that strategic choice, I think they're increasingly faced with a world in which U.S. foreign policy can shift rather dramatically. And so rather than, kind of banking the Trump administration, which I think a lot of people expected to happen, there is a lot of thinking going on in the Gulf right now about how reliable the United States is as a long-term partner.
President Trump also has sizable personal portfolios in these countries. His son Eric Trump was recently in Qatar to announce the country's first Trump-branded real estate project in a $5.5 billion deal. And there'll soon be Trump Towers in Dubai, Jeddah and Riyadh, and more Trump golf courses in all three of the countries that he's visiting. In his first term, one of Donald Trump's signature foreign policy achievements were the Abraham Accords, the normalization of diplomatic relations between Israel and the UAE, Bahrain, Morocco and Sudan. Trump's Middle East envoy Steve Witkoff has hinted more names could be added to that list, but one name in particular seems unlikely. Saudi Arabia and Israel had been close to agreeing a deal before Hamas's October 7th attack in 2023. Since then, the Saudi Crown Prince has accused Israel of committing genocide in Gaza. Ambassador Gray thinks it would be very difficult for the Saudis to normalize relations with Israel during this trip.
I think the flaw of the Abraham Accords was that they were built on a faulty premise, which is the world can ignore the Palestinian issue and everything will be fine in the Middle East. And as we so sadly found out on October 7th, and subsequently, that's simply not the case.
The Gulf states have also been influential as mediators in conflicts besetting the region. Qatar and the US have worked together on the conflict in Gaza, and Oman has helped mediate between the US and Iran and facilitated the Houthi ceasefire in Yemen. Iran is also likely to factor in discussions as the US moves nearer to a possible deal to limit the country's nuclear capabilities, which would provide regional stability and a welcome relief for the other Gulf nations. Nick Harper, CNA, Washington.
Coming up on East Asia tonight, Christmas is saved in America after the tariff pause, with toy makers restarting orders from Chinese manufacturers. Hello again. As promised, it is time again for Business News with Roland Lim. So, Roland, SoftBank appears to be getting its mojo back after a good number of years.
It does seem that way, Oteli. And it's going to be bringing big respite for its investors. Japanese tech investor SoftBank Group reported its first annual profit in 4 years as it ramps up investments in AI. The Tokyo-based conglomerate reported $7.8 billion in annual net profit, reversing from a loss of $1.5 billion just a year earlier. The company's earnings often swing dramatically because it invests heavily in tech startups and semiconductor firms, whose share prices are volatile. For the fiscal fourth quarter, the tech giant booked a profit of $3.5 billion. That's a 124% jump on year, amid strong performance from its telecommunication holdings and higher valuations in its later stage startups. Now, its Vision Fund 1, which invests in late stage startups, recorded an investment gain of 6.3 billion yen in the fourth quarter, boosted by increases in the fair value of holdings such as TikTok operator ByteDance and e-commerce platform Coupang. Experts say the earnings is a vote of confidence for SoftBank as it embarks on another series of mammoth investments. It would also bring relief to investors scarred by the firm's earlier high-profile failures. SoftBank has invested heavily in AI chips and infrastructure over the past 2 years. It is now targeting companies it deems to be leading the development of artificial intelligence. It recently acquired U.S. chipmaker Ampere for $6.5 billion. It is also leading financing for OpenAI's $500 billion initiative called Project Stargate to expand AI infrastructure across the U.S. Speaking of which, the multi-billion-dollar Stargate project to shore up AI infrastructure in the U.S. has hit a snag, according to reports. Plans by Japan's SoftBank Group to invest around $100 billion are said to have slowed as U.S. tariffs delayed financing talks. Bloomberg reports that SoftBank has yet to develop a project financing template for the investment. Potential financing discussions have also become difficult on account of higher capital costs due to U.S. tariffs. There's also growing concerns that demand for data centers may be dampened due to economic uncertainty. The Stargate project was announced in January by President Trump to further U.S. artificial intelligence infrastructure. The initiative, led by OpenAI, Oracle, and SoftBank, began with promises to deploy $100 billion immediately and to raise that to around $500 billion over time. The presence of cheaper alternative AI models like DeepSeek has further raised question marks about the long-term profitability of the project. Japan's second biggest automaker, Honda, has warned of trade tariffs taking a toll on its earnings, joining rival Toyota, which predicted a 35% year-on-year drop in annual net profits because of the levies and other factors. Honda is forecasting a 70% drop in net profit for the 2025-26 financial year as U.S. levies weigh on the global auto industry. It is expecting net profit of $1.7 billion for the 12 months to March 2026. Honda says that tariff impact and recovery efforts will have a negative effect on operating profit, estimating that it will cost the company around $3 billion over the year. Its CEO said that business in various countries has been very significantly hit. Honda also said it would put on hold for approximately 2 years to build an EV supply chain in Canada. Honda's forecast is the latest signal of the difficulty car makers are having to navigate Trump's tariffs on foreign-made automobiles at a time that the industry is also being hit by the rise of Chinese EV producers. Similar story for Nissan. It has unveiled plans to scale back production after logging a significant hit to earnings, capping a tumultuous year that has left the Japanese automaker fighting to turn itself around. The heavily indebted Japanese automaker says it has booked a net loss of $4.55 billion for the financial year to March 25, and that compares with a net profit of nearly $685 million in the period a year ago. Revenue fell 0.7% from a year earlier to $23.5 billion. Nissan has been badly damaged by weakening sales in the US and China, and then saw merger talks with Honda collapse and was recently forced to replace its chief executive. It also recorded restructuring expenses and wrote down the value of production assets in North America, Latin America, Europe, and Japan. The automaker is in the midst of turnaround efforts to address falling sales. It has announced plans to slash a total of some 20,000 jobs worldwide. It is also reportedly planning to suspend operations at some domestic factories. Now, Nissan didn't provide profit forecasts for the current fiscal year, citing uncertainty over the business environment due to US tariff policy. The US started imposing a 25% tariff on finished foreign-made cars in early April. Apple is also facing stiff competition from its rival. Samsung Electronics has unveiled a slimmed-down smartphone with its Galaxy S25 Edge. This potentially starts a trend of thinner handsets to launch this year. Samsung's latest device is about 30% thinner and 25% lighter than its S25 Ultra. That's its high-end phone. The newest device also includes premium features such as a titanium frame, 200-megapixel camera, and high-end AI capabilities. Now, analysts say Samsung is looking to beat its rival Apple in the premium market. Its launch is seen as strategically timed to get ahead of Apple, which is expected to launch a thinner iPhone in the second half of this year. Samsung Electronics closing more than 1% in the red. And that'll do it for business at this hour.
Thanks so very much for that, Roland. It looks like Christmas came early for American businesses that rely on Chinese imports. Retailers had cancelled or delayed orders when tariffs skyrocketed to 145%. But now that they've been paused for 90 days, some are seeing light at the end of the tunnel.
Christmas will be saved. And our hope is from here is the 30% will maybe go down to 10% or less.
Despite the breakthrough in the trade war, toy makers like Mr. Foreman say they're not out of the woods because prices will still go up, but not by as much.
Because the tariffs have come down to 30%, you're going to be seeing probably 10-15% increase in the cost of merchandise. Not 30, not 50, not double or triple as it would have been, or a huge lack of a lot of product, empty shelves. You won't see empty shelves. There'll be product to buy.
Well, Japan's ubiquitous salarymen in their dark suit and tie are the backbone of the country's economy. These white-collar workers are known to lead a life that revolves around work. But a group of them here breaking the stereotype. Meet cheerleaders, which is a mashup of cheerleading and salaryman. They were all from Waseda University's male cheerleading squad, but have now grown into salarymen on weekdays and cheerleaders over the weekends. The group, formed in 2023, volunteer their weekends to spread cheer through their acrobatic performances. Now, those routines have earned them an advertising gig for stretchy suits, a spot on Britain's Got Talent, and some intangible benefits.
平日は頭を使ってで土日は体を使って疲れるっていうので疲れる部分が違うのとやっぱそれぞれがどっちかがうまくいってない時もどっちかがうまくいってたりして心の健康にはなってるので全然疲れが残るとかはないです。
And that's East Asia Tonight this Tuesday. Don't forget your headlines anytime at cna.asia. We'll leave you with more breathtaking stunts from the chairman.
Viva!